Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. So first off, just want to apologize. There was some technical issues over T3 yesterday. So um, if you're wondering why some of the midday updates for Options to Play were a little bit delayed, it's just unfortunately just had a little bit of a software problem, and working through that. Things should be back to normal soon. So apologize again. Uh, and it's really been a wild couple days. So I feel like trying to maneuver in this market right now. Things are developing very 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 fast. You got to be quick. Got to keep tight stops, and you got to be a little bit more reactive, right, versus anticipating, because things have kind of come out of no. I mean, everybody knew that we were have a Fed day yesterday. Most people expected a rate hike, right? And I did a video talking about expectations going in. I talked about it in the nightly letter, right? Talked about what the squares are pricing in, and how there was a potential for a surprise, because people had a little bit more mixed expectations, right? Nearly everybody expected a rate hike. The magnitude of the rate hike was a little bit different, and then the guidance or his language about his path going forward, the Fed's path going forward, was definitely going to be a little bit of a wild card too, right? What happened was there was just a really, really sharp move lower. Let's go to the 30-minute. So a real sharp move lower yesterday afternoon, when it seemed as though maybe the pace going forward is almost like a one and done, where people were looking for multiple hikes this year. It seemed like maybe it was more of a one and done camp, right? So you had this really sharp drop, finished weak. Then today, prior to the last hour and a half, just had a really sharp snap back, and it looked like we were going to reset above the 20-day, right? We were above the 20-day. We were actually above the 8 EMA too. And then what do you know? Trump tweets raising tariffs beginning of September, and then the market just drops straight back down. So things are developing super super fast, and that's why I say it's a little bit better to be more reactionary than anticipatory right now, because things have kind of come out of left field, and you kind of just need to respond to those fast developing moves, right? And that's why you got to have a game plan. You got to know where your stops are, right? Things that you're long, you got to know where your targets are on things that you're short. These are the type of scenarios where I'm sure you've seen it with the options and play position list, right? You carry these hedges for a while, and then you're just you're kind of banging your head against the desk, saying the thing does nothing but go up. Like, why do we have these hedges in place? But these past couple of days are the prime examples of why, because sometimes moves lower can be a little bit unpredictable. So having those hedges in place can kind of help with the downside exposure, right? So now. So now we have the S&P is starting to break the trend, right? And this is looking oddly familiar to what we did in April, right? Which was just a low volatility, aggressive trend through the heart of earnings season. And guess what? July, low volatility, aggressive trend through the heart of earnings season. We broke lower, basically the first session of May in the spiders, right? And now we're breaking lower beginning of August. So just a lot of parallels, a lot of similarities. The thing you want to watch, if we don't have a really sharp bounce, if we don't get back up to the 20-day, then the real obvious target's going to be the 50. Okay, so that's like 292.50 and change in that ballpark. And what you want to take into account is, I always say that earnings don't happen in a vacuum, right? You have a game plan coming into the week. But things can change, right? Like if the market's ripping higher, then pressing a bearish setup or a short into an earnings report might be a little bit tougher, because things are maybe a little bit less likely to get paid to the downside, because everything keeps going higher, right? And then if we're starting to actually show some signs of weakness, like we have the past two sessions, then maybe you want to like scale back the uber bullish bets or the speculative bullish bets a bit, because people might be a little bit more reluctant to chase things to monthly highs or 52-week highs if the market's really starting to show signs of weakness. Okay, so tonight, coming into the week, I was looking at Square, right? So really nice setup, nice little tight bullish flag. Definitely was a more speculative bet prior to the market rolling over. So you want to plan accordingly because now the market's acting a little bit weaker. It might be a little bit tougher, and like the time frame might get pushed out. I mean, it does still look good, and if it beats, it could still work its way higher. But because of the overall action, the time frame might be a little bit longer than it normally would have. Right, in a strong market, maybe this would have popped and ran, but now maybe it takes a little while longer. So these are things you need to take into account, right? I mean, like these are the fast moving developments. This is how it changes, the action in the overall market, but also how it changes the actions in what you're doing with like these earnings trades. So it's great to have an idea, right? And you can still stick with some of these ideas, but maybe instead of being like your 100%. Your 100% allotment, maybe you scale it back to 75% allotment or 50% allotment, right? Maybe you're just dialing back the bets a little bit until maybe there's a little bit more clarity or maybe there's a little bit more direction in the market. This is on the bull side. If it's a bearish bet, then that's a different story. Maybe these are like, instead of you were thinking about a 50% allotment to a bearish bet, maybe you're looking to get a little bit more aggressive just because the selling pressure is really starting to pick up. So maybe instead of 50, you're looking at maybe a 75% allotment or 100% allotment, right? So again, things are kind of developing pretty quick, and they'll certainly be. We're probably certainly setting up for an interesting Friday after the way like these last 2 days are, because guess what, we have a huge event tomorrow with the monthly jobs report, and it's another busy night of earnings. So things seem like they're likely to stay volatile for at least through the end of the week. We'll see what Monday has in store for us, depending on what tomorrow's action looks like, right? So obviously, you guys know how to get in touch with me. Please reach out if you have any questions. I want to apologize again if there was any delays getting those updates to you yesterday. There was just some software issues and just working on fixing those. So again, sorry about that. On a programming note, this coming option session, normally on Monday, it's going to be on Tuesday instead. Just I have a scheduling conflict. So instead of this Monday, it's going to be this Tuesday. So that is August 6th instead of August 5th. Okay. All right, guys. Best of luck if you're playing anything tonight. I hope you have a wonderful evening, and I'll speak to you all tomorrow. All right.